We just had the lowest unemployment print in the US in decades. Interest rates are rising again. Stocks are tanking, especially tech stocks. What does this mean for the next few weeks and months? In the meantime, investment in the Web3 ecosystem is absolutely booming. We have Abra's new head of research here to discuss all this and our weekly Ask Abra Anything. All right, it's time for Money Talks. Let's do this. All right. Hello from California. We have a lot going on. It's been a crazy morning here. The markets and macro are leading the way as they have been for the last few months. As I mentioned in the opening, we had a very interesting unemployment print. Let me bring this up here. Charlie Bilello, who I follow, he's a fantastic macro guy who had some interesting commentary on the unemployment print this morning. So I'm going to bring it all together for you over a few charts and comments. So let me start with Charlie's commentary here. Let me find that for you. So the bottom line is that the U.S. unemployment rate is now at its lowest level since the late 60s. Which if you're waiting for the big pause that I keep telling you is coming, it doesn't bode well for that, right? And so he claims that the market is now pricing in an 80% probability of another 75 basis point rate hike in November, which makes sense. I do still think we're going to get a pause in Q1. I do think that the mood of hiring, when I talk to my fellow execs in the larger tech companies here in Silicon Valley, when I talk to friends in finance in New York, when I talk to people who are tracking supply chain, they are saying that hiring is hitting a wall. It just isn't represented in the numbers yet because they're a bit of a trailing indicator. So I do think that the unemployment is going to catch up going into next year. I looked at, and I think I mentioned this last week, some of the seasonal numbers that I'm seeing out of the likes of Walmart, some of the seasonal numbers I'm seeing out of the likes of Walmart are way lower in terms of hiring, tens of thousands lower actually versus this time last year. So we'll see how all of that plays out. The other thing I was reading, actually, before I get to that, let me show you a couple of charts here. So this is the US 10-year rate. As you can see, it was on a downtrend last week, and it started to spike this morning, pulled back a little, but you can see looks like it's gonna test that local kind of near-term high. And I do think we're going to basically get a close. We will hit 4.1. I just don't see how it doesn't happen. Now, in terms of bond prices, which are inverse to rates, you can see what's happening here, and it is ugly, right? It's ugly. And I honestly, if I switch to the weekly view, as I've said to you all many, many times, this is, in my opinion, unsustainable. The cost of debt will rise. The contagion that it's causing in Europe and Middle East and in Asia, is unsustainable. And the Federal Reserve will have no choice but to, at some point, avert a global catastrophe as it relates to the bond markets that are effectively in free fall. And of course, that all is basically driven by the quantitative tightening happening in the US, which is causing the dollar to skyrocket. Now, as you've heard others say on our show, it's really the margins that matter, meaning how fast are things changing? And right now they're changing pretty damn fast. And it's not the fastest we've ever seen the dollar go up in nominal terms, but we're pushing the boundaries right now. And I think if we hit 115, 116 on a sustained basis with DXY here, which is the dollar index, I think we're in big trouble and structurally, right? And that's probably good news for traditional assets. Look, I don't want things to break. I think things are breaking, and I think the question now is given this kind of dichotomy of job market and labor still looks strong, but macros are kind of trending otherwise in the wrong direction. What is the likely response? Well, the likely response is absorb more short-term pain. We'll see an ISM print probably in the low 40s to high 30s by the end of the year, which means deep recession. The labor market will catch up with the negative news going into the first half of next year, probably post holidays. I would say for sure by the end of Q1. And I'm guessing we'll see a wait and see message sometime in Q1 and go from there. But that's still my best, kind of my base case. We may see some 5% moves up and down in the meantime, but I think the big rally is probably Q1 at this point based upon this. So let's see, I think there was something else I want to show you here. So yeah, so that's DXY. Like, look at the tech stocks. I mean, it's just ugly right now, right? So they were on a move up. This is weekly. Let me switch back to daily. And you can see, right, a new short-term low seems to be in the cards for the QQQ is basically NASDAQ 100, which is more or less weighted towards tech stocks. It's been an ugly week for Apple. They did rebound a little bit after they kind of reset expectations with manufacturing, but also not looking great right now. So all in all, and I'll give you the lowdown on Ethereum. What's interesting here is that we're nowhere near the June lows, right? So I do think that June 18th was maybe not the end of crypto winter, but probably the low for crypto as a overall market, with Ethereum likely leading the way. And I do think that it will lead us higher going into the spring. Again, I'm going to basically base my opinion on facts that I see as they evolve. And nothing has materially changed since I started explaining my base case to all of you. And again, I'm not an advisor. I just basically tell you what I do for myself and try to give information because it's interesting. And you should all do your own homework and decide for yourselves. But my base case is basically the same as it was before, which is the path of pain is higher. People are expecting things to go lower. I think that's been priced in. I think a recession is mostly priced in at this point. We are basically pushing the boundaries of the worst stock market performance since the Depression, and interest rates are skyrocketing, and credit is tightening at a rate which makes our debt effectively unsustainable, unpayable, as a matter of fact. So at some point we have solvency issues. And I also think that the yield, now I have many friends who basically have been laughing, laughing at Arthur Hayes' commentary on yield curve control. But guess what happened, right? Last week, things started breaking in the UK, and they effectively had no choice but to start buying their own bonds, right? Which looks and sounds a lot like yield curve control to me. So the problem is that America is in its own kind of bucket right now. Let me actually read these three sentences that I read this morning from Arthur that I thought were absolutely spot on. America is self-sufficient in food, fuel, and people. China, Europe, Japan, and the UK are not so blessed. America can be autarky if it pleases. As a result, the Fed has the luxury of being able to prioritize domestic political concerns regarding inflation over and above supplying the world with a constant flow of dollars. A constant flow of dollars allows the rest of the world to print their currencies and still afford to buy energy in dollar terms. It's a relative game, and if the strongest player goes their own way, everyone else is left to suffer. Everyone else is left to suffer. That's exactly what's happening. Okay? The rest of the world is breaking faster than we are because they don't have a reserve currency to play with and be able to execute quantitative tightening the way we can, and also a strong labor market, which obviously sends a mixed signal vis-a-vis the fact that inflation seems to have peaked and is probably going to come down dramatically. I do think we're going to get an uptick in inflation slightly before it comes down, probably because of oil and the war and the Saudi message this week that they're actually going to decrease production, which in the middle of a war is not something you would expect your friends to do, but it is what it is, and we'll deal with it. But remember, in the last year, we literally went, or 2 years, we went from negative oil prices. If those of you who can remember 2 years back during COVID, when we had no place to store oil, we actually had negative oil prices for the first time that I believe in history. And now we're looking at $80 oil again. So anyway, it's going to be really interesting to see how this all plays out over the next few weeks and months. There's a lot of conflicting data right now. Some of it is trailing, which is problematic. The Fed itself is becoming a trailing indicator for the macroeconomy, which is very disconcerting. I think this is one of the worst policy teams that the US has ever assembled. And I think I have data to back that up, but that's not the point of the show. But I can get into it at some point if there's demand. I don't think there is, but I'm pretty sure I'm right. And I think history will show that this is the worst policy team that America has ever assembled. Okay, so however, I actually have spent the last couple of days having some fun. The MIT Alumni Association has been hosting events for its Northern California alumni here near where I live at the Computer History Museum in Mountain View, and yesterday up in San Francisco. And I had the pleasure of keynoting both events, and it was fantastic. The amount of building going on in our space, whether it's in Web3 gaming, identity, banking, a la Abra, is just awesome. And the interest in this space really does remind me of the mid-90s. It really feels like the world is full on build mode, as we were in the Web 1 days. Right. And now, I gave my perspective on the history of how we went from Bitcoin to crypto to now Web3 and what it all means. So that's a great segue into what I want to do next here, which is we have a new head of research at Abra. Mike Maizels joined us a few months ago very quietly. We don't let him out much. Mike's going to join us for the first time. Good morning, Mike. How you doing?
It's a pleasure to be here.
I guess good afternoon for you. I think you're in the East Coast, so good afternoon. So the gang here has never met you. You joined us a few months ago as head of research. You've been cranking out some awesome stuff, which we'll get into in a minute. But give us like the 90-second on yourself and how it is you came from being just a prolific writer working on a whole bunch of different eclectic stuff to focusing on crypto and Web3.
100%. So the long story of me quickly was that until 2019, I was whatever this means, well-behaved art history professor. So I had done a PhD in modern contemporary art history in 2013, had aimed to split the difference between the museum world and the academy. So had done postdocs, was at the Smithsonian, was at Wellesley College, was tenure track at the University of Arkansas. And one semester before I was supposed to go up for tenure, decided to go leave and do something else. Part of it is I'd gotten very interested in the art market, but had come to understand how cultural products, we'll call them, produced on the left side of the balance sheet, are products of things happening on the right, and felt like my, training in cultural history had prepared me very badly to think about that, and had become much more interested in turning the telescope of the past around to try to, prognosticate, theorize, understand the future, to understand analogs. I'm sure we'll get into this in a second, between the printing press and the blockchain, right? These are both like forced trust, brute force copying mechanisms that replace trust in central authorities with, a copy you can keep on your own nightstand for all intents and purposes. So without, much of a plan, and truthfully, without much Web3 knowledge, left my tenure track position to go do a mid-career MBA at MIT, graduated from that in the middle of COVID, was lucky to be able to post up for a couple of years at a wonderful think tank working group called the Meta Lab at Harvard, worked on a number of very, very interesting projects, but kind of threaded through all of them was disruption between tech, media, finance, and art. And at a certain point, I looked out the window and said, I have to join this crypto ecosystem. I'm a big Warhol scholar and published a bunch on him. And I, being me, went back to the literature and read all of the objections to early Warhol. Oh, we can let like abstract painting in the gallery. Okay, sure, fine, no problem. But soup cans, no, pop art, it's too much. We got to stop here. And I sort of thought, okay, that kind of criticism doesn't age well. And that if you're the person of my biography looking to disrupt finance, art, technology, creativity, you have to engage with the crypto ecosystem. So I started writing, I started publishing, was delighted to find this job here, thinking long term about the, multi-decade, perhaps multi-century impact of all of these kinds of things. Because I think at the end of the day, digital bearer assets can disrupt anything that can be owned or paid for, which is almost anything. And therefore, these technologies are going to disrupt every possible field of human endeavor, and trying to follow that thread forward through law, through supply chain, through creativity, through finance itself, through a million different kinds of channels. It's just a pleasure to be here.
That's awesome. And so, what was the impetus, or actually, let me take a step back. What was your first exposure to the crypto world? And did you have like a specific aha moment? Was it an evolution for you?
There was a pair. So there were two reasons to systematically ignore it, and then finally come back around.
There were many.
So it was introduced to crypto from a professional older brother mentor figure named David Teng Olson. He's a wonderful professor at Wellesley College, new media guy. He and I had attempted to stand up a Bitcoin mining art installation in rural China, connected to all kinds of crazy things that probably the audience is not necessarily super interested in, but happy to correspond to anybody who wants to reach out and hear this long crazy story about mesh nets and all this stuff, and thought, wow, that was an interesting experiment. Great to close that door. Beeple happened in 2021, and there were reasons I ignored it on purpose. So I just published a book. Bill, I don't even know if you know this. I had a book come out from the University of Michigan on the art market in August. And one of the case studies is about the art market of the 1980s with Alfred Taubman and Mary Boone. And there were some figures who basically had a very, very sharp rise up and then a very, very sharp rise down that to me just seemed like the Beeple echo. And I said, okay, great. Wow. Another reason to be certain I could ignore this. The first one was that it was a crazy person who introduced it to me. And the second one is, well, here's this phenomenon I know with history will fade away immediately. Great. Perfect reason to ignore it. Yeah. The thing that changed my mind, and this is going to come as a shock probably to a lot of people in the audience, was Bored Ape. Bored Ape, you can say what you will about the aesthetic qualities of the monkeys. You can say what you will about the cultural priorities or not of Bored Ape holders. I try to make it my business to not opine on other people's cultural priorities, but it just is what it is. But there was something about the way that the whole project literalized certain kinds of functions from the art world. Oh, this is the Picasso Club collector's room, right? Why don't you come in and be one of the Picasso Club collectors? They made that the explicit premise of the project. Yeah. And there was something to me, again, to go back to Warhol, right? Where you'd think the move from Warhol is from one painting to 50 screen prints. This to me felt like the next generation, right? And there's like a lot more gross market value around 50 things or 10,000 things. New collectors, new ideas, new stuff flooding into the ecosystem. Thought, this is something really interesting. And then I started thinking about all of these historical analogs for these moments. And I returned to something a professor, mentor of mine in graduate school says, a Renaissance expert. And he was talking to me about the interconnections between Renaissance banking, Renaissance painting, right? So some of your audience may be familiar with the origin stories, the Medici, the bankers, and deposit banking, and paper slips you can carry around, right? The bankers are able to move houses. They don't just, born and die in the same castle. They want to go from house to house and hire architects to build them, write the names of the people who painted their walls and all these things. It's all super important. So paint on canvas, it's actually a really interesting material because it's the same canvas that's making canvases for Da Vinci, Michelangelo, all the Ninja Turtles, I like to call them, as well as the age of sale, age of exploitation, exploration, whatever you want to call it. So it's this mobility of money, mobility of goods, and mobility of art. All three are turning through a screw. And I felt like I'm looking out my bedroom window and watching the next screw turn and thought, boy, I want my hand on that screwdriver along with real builders in the space.
So what have you, okay, that was your initial maybe thought or impression, like new medium, right? What is your perspective now? Has it changed? Has it evolved? And we'll get into the Pulse in a minute, which is the new publication. But one of the topics was, I think you referred to it as non-fungible futures. So what does that mean to you now?
So I think, and it's funny because the pace of this industry moves so fast compared to traditional academia, even in some ways, colleagues of mine from traditional finance, the salient idea of June feels like ancient history by August, and trying to write against that idea has been a little bit of the, work I'm trying to do to make arguments that I hope will stand up over, years rather than, weeks or minutes. But I guess I'll tell you what I think has not changed than what I do think has changed.
Okay.
To me, I think has not changed is the incredible shift in unit economics of things that are produced in Web3 versus the analog world, right? So I read a very smart commentary about Bored Ape that said, in one way, it's the far, far out and away most successful franchise in history. You think, what does somebody have to pay to open up a Domino's franchise, and what do they actually get for it? Equipment, pizza ovens, got to do a lot of onboarding training. What does a new Bored Ape cost? At one point, nearly $500,000. Now it's sitting at around $100,000. And what do you get? The IP to your Bored Ape. What's the cost of service for the IP to a picture of a monkey? Zero. Right. So I ran the numbers, in some of the details in the article that I think can be downloaded in preview version. But compare Yuga Labs to Disney, right? They're both path-breaking entities that capitalize on some step change in communications tech and also rendering technology. So that piece actually looks at some of the potential overlaps between Bored Ape and, synthetic media, text to speech, stuff like that. And it's crazy. Those are new analogs to color and sound animation from the 1930s, right? So if you think about Disney and Bored Ape in dialogue with one another, depending on how you slice the numbers, it's like 100-to-1 revenue per employee. That's crazy. 100-to-1 revenue per employee, right? I will admit that I borrowed that metric from Kathy Wood, and it's great. And I've been since applying it to numerous other kinds of things. Another really interesting one from the forthcoming issue of the Pulse looks at cybersecurity. And in terms of like lines of code to secure $1, again, it's something more like 1,000 or 10,000 to 1, a smart contract versus a legacy bank account with your security. Yeah. So that if you can do something 10,000 times more efficiently than your legacy competitors, it's the same thing of printing Bibles as opposed to paying monks to write them on the backs of dead sheep.
So there's something interesting in what you're saying here that I hadn't really considered before I read what you wrote, is that you're looking at it to a certain degree like the Bored Ape Yacht Club is actually putting each of the owners of 5,000 or 6,000 in business, or maybe 10,000, right?
10,000.
Akin to Domino's putting people in business, which is very different than saying that Andy Warhol put me in business because I own an original, tomato can. Right.
And I think that's that promise to put you in business as the tomato can owner is there in Warhol. It's inherent, right? Warhol is the coiner of the phrase that in the future, everybody will be famous for 15 minutes. And the celebrity Marilyn Monroe and the soup can are as disposable as one another. And then his work, as time goes on, more and more mirrors get involved. And the idea of the spectator as the kind of instantaneous, quasi-disposable, rapidly obsolescent celebrity is deeply embedded in Warhol. But I think what's a little new in the Bored Ape, ideology here is that you can own this thing for some kind of permanence, right? The blockchain is like a digital permanence that will give you the rights over this thing to be a franchise owner. And then you think about the cost exactly forever. Yeah. What's the cost of capital of starting a pizza restaurant versus starting an ape franchise, right? I have a buddy who started a whole skateboard franchise, Skateboard, right? It's like pretty clever pun, based on owning his monkey, which he then sold and bought a home. That's insane. That is revolutionary in terms of its potential, in my opinion.
Yeah, super interesting. Okay, so we've established you've been thinking hard about where this NFT model is going, and at least one of these models, which I've been thinking about 100 different ones, but not as deep as you have, which is awesome. And so another one that you've been thinking about, and what I'm going to do here is just briefly show folks, via Mike's amazing work and some partners have created this new quarterly research journal called The Pulse. It's available to Abra clients. So, in a similar way where, Real Vision publishes their global macro investor research publication, which is more macro based, we try to do something which is very crypto Web3 centric. And it's they don't manage people's money. We help people invest in and manage their crypto investments and Web3 investments. And you can see here from the first edition, we were already talking about the part 3, where there's the non-fungible futures. I wanted to ask you in a minute about open banking, but you also write about user safety. And I also want to follow up, and probably the last topic is what your idea on this crypto renaissance. So, and then maybe give us some inklings as to what's coming next. But let's and by the way, for those of you who didn't get a copy, you can contact your Abra sales rep to get a copy. And if you don't have an Abra sales rep, you can go to the Abra website and go to the section to contact sales, and they'll get you in touch with the right person to get your copy. So because this is super heavy stuff, and we do target it for Abra clients. So let's talk about open banking for a second. What is the section was the first section was titled "Breaking the Impasse: Open Banking and the Internet of Value." Now, I'm guessing this is relevant for Abra. So give us like the TLDR on open banking from your perspective.
Absolutely. So I think, somebody newer to the space, didn't come from TradFi, didn't come from tech. I had a lot of people in my life who said, Mike, what the hell are you doing? You're going to get a job in crypto? Like, what the hell is crypto? And it forced me to drive down to the studs what I thought was valuable about this and what I thought was, potentially completely revolutionary. So as I started explaining this to interested cousins and folks that are in that lane of my life, I'd sort of take out my iPhone and I would say, listen, you know what the internet is, right? The internet is an internet of data. You can use this thing to send me text messages, images, maps, shopping data, anything you want, no matter where I am. And it's like being able to put a note into the pocket of somebody who is non-local, right? Bill and I, we're sitting here talking. It's as though we're exchanging voice and video with each other and also with all of our listeners. It's an incredible piece of technology. Cryptocurrencies are the exact same thing, in my opinion, except instead of putting a note into the pocket of somebody at a distance, you're putting $1 into the pocket of somebody at a distance, right? So this idea of emailable currency is revolutionary. And folks would come up with this objection and say, oh, but there's like digital payments or Venmo. It's like, no. That's like information about money. There's a difference between a check for $100 and $100. If you have a check for $100, you need a bank account. You need to upload that to your bank account. You need to wait for it to clear. You could lose. There's a lot of technology that stands underneath that, which is obviously still true of crypto, but in a different way. But they're bearer assets. Once you have them, and then that's kind of the end of the story. Yep. So the open banking piece actually had come out of some research that I had done at the Meta Lab before joining before joining Abra, looking at non-innovation in the banking sector and basically looking at opportunities that banks had to embrace data sharing and embrace the kind of network effects from technology that we're all very, very familiar with. And for various incentive alignment reasons, some of which have to do with regulation, some of which has to do with cultural attitudes of the industry, opportunities were not taken. Now, with digital bearer assets, and we'll also include Ethereum and programmable digital bearer assets where smart contracts can be baked into the money. So that takes us from like a digital bearer asset to like a digital bearer infrastructure where the infrastructure can be born along with the money.
Yeah.
Say that good preview for Abra Pulse issue 2. That has the potential to seize all of those opportunities that banks failed to capitalize on. And there's a little pull quote here, Bill. I don't know if you still have the ability to pull it up. I can grab it off of my desk right here too. What
page?
It's on page 14. So without belaboring the argument here, banks looking for new net revenue just decided to start charging you more fees and penalties. But that only is going to work for so long, and the blockbuster moment of the industry may be upon us, right? Looking at 2005 and said, oh, by 2015 and then 2025, what do you think the status is going to be of the internet native version of Blockbuster in relationship to MGM Grand, nobody would have bet on the internet native version of Blockbuster that nobody had yet even heard of overtaking every Hollywood studio on the planet. It happened. When does this happen? I don't know exactly. And that's part of the difficulty of all of this is I have a ton of faith that all of these things will happen, but at what pace and what kind of causation and what sort of domino effect within each other, devil's in the details.
Yeah. I think, and I've said this publicly as well, I do think that certainly within 20 years, probably 15, the largest bank in the world will be based on DeFi rails. And people would say, well, the largest media distribution company before, actually, in terms of not actually owning the content, but distributing the content before Disney Plus was Netflix, and they didn't exist, in the early 90s. And we were talking about Blockbuster as the future. And within another decade, they were basically dead. And so this is growing faster than the internet itself. And everybody's assuming that the regulatory moats that the incumbents have are going to save them. And I just don't think it's true, because these systems that have no off switch are not going to stop for anyone. So I think you're spot on.
Here's another one to bolster this, again, from issue 2. Uniswap, largest DeFi player, has 10 times more deposits per employee than JP Morgan.
Yeah. And what is their cost basis? Like zero. Yeah, it's incredible. And they're the rails of the future for us. I see us looking at, and I was we did a panel last week with Rob, again, one of our heroes in the DeFi world from Compound, and Uniswap, Compound, Aave. I mean, they're the heroes of the financial industry as far as I'm concerned. We're just basically creating a way to bring it to all of you, which I'm really excited about. But these guys are heroes as far as I'm concerned.
Analogy I've been fond of is that, you think about platform disruption in all these different industries, right? Uber is just rides in other people's cars. Airbnb is just rooms in other people's houses. DeFi is just money in other people's wallets.
Right. It's interesting. It's a sharing economy for money. So I wanted to ask about, and as a reminder, as I said before, if you don't have a copy of the Pulse, you can contact your sales rep. If you don't have a sales rep, just go to abra.com and click through to the private client sales and contact the sales team, and they'll get you a copy or ask support, and they'll explain to you what to do. You talked about the crypto renaissance, and you referred to it as Enlightenment 3.0. What is Enlightenment 3.0 for you?
I'd be happy to answer that question. Can we pull up the image that's associated with it, partly because I need to give a shout out to the artist who made this thing, and partly because it's interconnected to the answer.
Yep.
So all of the issues of the Pulse are illustrated by the work of a significant contemporary artist. This is me kind of carrying my work as a museum curator forward.
Is this the image you're referring to?
Yes. Yeah. So that's a work by an old friend and artist named Oscar Santalan, who's based between Ecuador and the Netherlands. Mm-hmm. Really compelling, very interesting artist making work about basically modernity from a new world, indigenous-centric perspective, but thinking a lot about Europe and the new world and the ways that they figure one another. So this is a piece that he made by sailing to an empty spot in the Atlantic Ocean that Christopher Columbus thought was populated by a treasure island. He was lied to. There was nothing there but empty ocean, but the search for him haunted him to the day that he died. So my friend, the artist, Oscar Santalan, got, I can't remember, hundreds of gallons of seawater that he evaporated into a tiny crystal that you could hold in your hand as a kind of metonym for the missing land. So to me, there was some,
How did he do that?
Slowly. Harvesting hundreds of gallons of seawater on a boat and trucking them back to land and putting them into evaporating, ponds until all.
I thought that's how you drown, is you harvest seawater on a boat.
Exactly, right? Yeah. Effort and concentration and distillation down into this chunk of history that you can hold. And to me, it kind of opened behind it to think about gold and salt and the pharaonic salt mines and these long histories of how we come to place faith in the things that we value and the human labor and the human exploitation required to produce them. So that's a long intro segue to this Enlightenment 3.0 piece, which I'm very proud of, which was co-authored with Joshua Rosenthal, who may be familiar to some of our readers. He had a Bankless podcast called the Crypto Renaissance that I believe was like the most downloaded bit of crypto content of all time, basically making some of the arguments that I had made earlier, that you look at a society at a moment of collapse in central authorities, like go read about the 14th century, the plague, the printing press is a solution for missing trust in central authorities, and then a society that finds a way to create, representative democracies are DAOs 0.0.0.1, right? So all of these different social possibilities opened up because of basically a technology that lowered communications cost, and then everything opened behind it, right? So I wrote to Josh and I said, I think this is a great argument that I believe, and I think you're letting yourself off too easily, because the Enlightenment was messy and painful and full of violence and death and upheaval and bad ideas. There were many societies started and failed that in some ways were analogous to like the Luna of political theory circa 1650. Not everybody's idea for how to make a new collective that voted on what everybody was going to do actually turned out to work super well.
Right.
So I pushed him and I said, well, how can we bring some granularity to the idea that what turns out to be good for everybody ought not to be built on the backs of those that it's designed to uplift? So how can we look at the relationship between retail participants in crypto today and some of the folks from England mostly, but lots of other places, who were enticed to voluntarily join the colonial adventure and basically earn the first fractional equity instrument in history, which was a share in a joint stock company, right? Those people were enticed at a moment of optimism. And then when the bear market hit, it was fever and it killed your whole family.
Right.
That's not exactly
the first example of sweat equity in the modern world, right?
Yeah, exactly. So how can we learn lessons from that kind of bluntness and violence onto the people who were supposed to be better off once this whole thing came online, and apply it forward towards building in Web3? And basically it comes into a punchline that you had asked me earlier what had changed and what hadn't. This is what has changed to me, is that I have come to see that there is a common confusion around ownership and utilization. So who your customers are, maybe they should be your owners, but you have to be very clear of what the value prop is to the owners versus what the value prop is to the users and the customers, right? And when you put the blades of the scissors over the top of one another, sometimes things get cut in a way that you don't want to. So the piece basically ends with a kind of exhortation to build technologies, and I'm happy to answer a question of what this means, that will permit the utility of digital bearer assets to come online. So this involves enabling transactions that the current financial system, the current payment rails, can't do profitably. In the same way, it wasn't possible, in a safe, profitable way to get into a stranger's car in 1983. Now it is. There are zillions of kinds of transactions that I think will come online to make the world better off. And I'm a big believer a lot of this is going to happen through the Ethereum chain, probably some other ones too. Pick your chain. We can have that, conversation offline. But I think that that's what's going to make the value of these things go up, is driving forward use cases that will require brick and mortar building one at a time in order to make the real world possibilities of digital bearer assets drive value.
So, and by the way, I would recommend that people go back and listen to that Bankless episode, and we can put a link in the show notes. Shout out to our friends at Bankless; they do a great job. So what's next? Like, what are you excited about right now? Give us a preview of what's coming in 2.0.
Yeah, great. I can pull up 2.0 right here, and then should be
Well, don't
able.
give it all away though. Just give us a,
Okay.
we don't want to give it all away yet, but give
Yeah.
us a
We
preview.
won't give it all away. You asked for an invite only preview. We can get a very quick invite only preview. All right. This will work. Y'all see my screen?
Yes.
Excellent. So the next issue.
The wizard hasn't put it up yet, but I think he will in a moment. But you go ahead. It's all good.
Good. Next issue of the Pulse is going to focus on real world. So the first issue was implicitly themed future world. The next issue will be real world.
Zoom in a little.
Oh, yes, absolutely.
Yeah. There you go. Perfect.
Very good. So I'm going to actually zoom back out just for a split second because I just want to show off the first article that I really want to highlight here. So I have been, before coming to Abra, had been working on basically the interrelationships between IoT and secured lending. Had a colleague of mine from JP Morgan, the two of us wrote up a paper on what we referred to amongst ourselves as beeping collateral, right? So you think of all of the frictions inherent in actually taking possession of something, keeping track of something, where something is physically in real time. This is actually a huge pain point for regional banks. Secured lending doesn't scale very well because it requires the heavy transaction of actually taking possession of collateral. So one of the most interesting research finds that surfaced out of there was a whole nest of developmental economists, most of them were based in UC Berkeley, but sprinkled around, who are investigating what they term digital collateral, which has absolutely nothing to do with what we in the crypto space would call digital collateral. So what they're referring to is things like solar panels in the developing world that may already be financed, but can be the basis of additional lending by security. So Paul Gertler is like a leader in this. I'd encourage folks who are interested in a real deep dive to look him up in his papers on the NBER. And there are huge ethical and technical problems lurking in this domain that I think require a lot of careful attention in building. But that doesn't mean attempts to pay attention in building shouldn't continue, because I think that the ability to offer lending with security over the horizon, where it's basically DeFi in the front and IoT in the back, has the potential to actually lay the payment rails outwards into the world that's really going to, rewire the planet in a Web3 crypto forward mode.
Wow. Okay. So we used to talk a lot in the early days of Abra about this idea of basically asset finance and microfinance, where basically, one of our, as a matter of fact, Julian Hardy, who runs the Crypto Banking Alliance that issues CPERCs, was the CEO of an IoT company that basically deployed the SIM chips that are inside the solar panels that people get in Kenya. And they basically make their lease payments using the M-Pesa wallet, which is the mobile money scheme in Kenya. And we always had this vision that eventually people would establish credit through Abra to be able to make these type of payments. And you've actually gone a step further and started to formalize this in a super fascinating way. And by the way, for the audience, I'm hearing this for the first time. I haven't had any prep work on this, so this is as fascinating for me as it is for you. Super exciting.
As Bill said earlier, they don't let me out very much.
So speaking of not letting him out much, we're going to get to Deepak and Tanner in a minute. So you're in good company. It's all good. And so I can't wait for this. This is going to be awesome. And so I think this is something that we were really early. We were way too early in even talking about this, but it was exciting for the Bitcoin crowd because they needed something to latch onto. It was all about speculation, and there wasn't even a digital gold narrative in 2016 when we started talking about this, or 17. So I think the timing now is infinitely better for this discussion. And so having you as the right person to lead the charge just sounds amazing, and I can't wait to do some episodes on this and start getting some folks from that world to look at this, because I think it's fantastic for crypto.
Stay tuned and look forward to more.
Yeah. All right. So you're online, right? So people can find you. Are you active on social media yet?
Yes, yeah. LinkedIn, because I'm actually more old school than it might otherwise seem. Otherwise, on Twitter and on Instagram, which is the legacy from the art world, is time value of art. So
Yeah.
a joke on the time value of money.
Yeah. And I think over time we'll publish more and more snippets of this via Abra's own Twitter feed, and we'll link to you there. So people who want to follow you directly on Twitter as well. And but we're super excited that you've chosen Abra as your home, and can't wait to read Journal 2.0. I don't know, what do we call them? We call them journals. Do we call them versions?
Issue 2.
Sorry, issue 2.0. I need to get my publishing brain skull cap on instead of my whale. I got my whale today, so I'm in number go up mode. Okay, good. So Mike Maizels, you're a treasure and bringing us a treasure trove, and we look forward to issue 2.0. And as I said, those of you who want to get your copy, and if you don't have it already, contact your Abra sales rep. And if you don't have one of those, go to abra.com or support, and they'll put you in touch with the right person. Thanks again, Mike. And we're gonna. You have a great weekend, and I'm going to look forward to getting my preview of 2.0 and digging it. All right. So, up next, we're going to jump right into it. I can see them in the background listening intently, so I know they're there. We've got Deepak and Tanner going to join us. So I know you guys were listening, so I don't have to ask you, but what was your take on all of that?
I was just struggling to keep up. I mean, intense, right? Yeah. I did read parts of the paper or do we say journal? Parts of the journal. And yet just listening to Mike talk is always fascinating. So that was fantastic.
It's so great because, we run the gamut at Abra from retail to now we're dealing with traditional institutions in the hedge fund world and macro investing world as counterparties and clients. And to be able to, now go so deep between our venture arm that we have now, where we're investing, I just can't believe, how we've evolved as a company in the last 4 or 5 years. It's truly astounding. I mean, we're looking at early stage investments. We're giving our clients research now on where Web3 is going and why. We're bringing new tools to market. I'm sure we'll get an update on trading tools and a couple of questions we got earlier on what we're doing with USDA, and because word's gotten out on that already. So it's pretty remarkable how far we've come. And I can say this because I'm not really doing the work. I'm just kind of watching you guys do the work. And so I'm not touting my own horn. I'm just basically kind of, as CEO, watching it evolve as well. But
particularly given the pace at which we operate, the space goes, just having somebody to just sort of take it all in and go deep on, the fundamental question of sort of why we are here, and where is all this going, and what's the future we need to build. I think that's very, very critical, and we're glad that Mike's on our team doing that for us. So
that's right. I mean, it's been an interesting reflection week for me because of this MIT stuff that I've been doing, and they make you kind of reflect and give a thoughtful perspective as opposed to just a business perspective. Most of them don't want to hear me pontificate on business. They want to hear really big, deep thoughts. And we're going so fast at Abra. Sometimes we don't have the time to do that. And this week, between prepping for this discussion with Mike, and like you said, you have to be able to keep up. So kudos to Mike there that he could kind of dumb it down for me. But it's really fun, especially in the middle of like some of the doldrums of the war and watching oil go back up and stocks take another hit, and obviously, crypto is still getting a halo effect on some of that, although it's actually holding up pretty well. It is fun to be able to have some healthy perspective on all of this. So, yeah. All right. So speaking of fun, healthy perspective, let's get some from the insiders at Abra. So, what is new and exciting in the world of Abra? So I know we've got some product stuff going on. I see in the internal Slack support super busy right now. So So why don't we'll start with Deepak. Give us some perspective on what's going on, and then we'll give Tanner a shot. And I've got a few questions today on the interwebs here for you guys.
Yeah. So the first thing is, earlier this week we launched Abra Boost. So we've been talking about Abra Boost for a while. And for those of you who haven't quite kept up, you should. By the way, we've sent many emails. But the way it impacts us is that what you used to know as Abra Earn is now we've shut down Abra Earn, and now we have a new product called Abra Boost. If you were a customer of Abra Earn, it doesn't impact you unless you are an individual investor in the US. So if you are an institutional investor in the US or an individual or an institutional investor outside the US, you're fine. You're not going to see anything. It's just going to be as usual. No problems, no action needed. But if you are an individual user in the US, what Abra Boost does is that it only lets you add any more assets to Boost to earn interest on your assets, only to those investors who are accredited. And we've sent many emails around sort of what accredited investor means and how to get verified by Abra. So please do check those emails out. But in fact, earlier this week, with the launch of Abra Boost, you're able to do that in your app. I know some of our users might have run into some issues, and there were some bugs that we were dealing with earlier in the week, which I'm given to think is all solved. And you should be able to go through the flow as intended. And so what you're going to see in Boost is that, again, if you are an individual investor in the US, in your app, when you hit transfer, the transfer button that lets you add assets into Boost, if you're not accredited, then it's going to pop up a screen saying, hey, we only accept assets from accredited investors, and here are the things that you need to do. And then you basically, there's some documents that you need to upload, and it'll tell you what button to hit. You can hit the button, go with the flow, and there you go. That's all that you need to do. And then very soon, our awesome support team will get on it, look at your documents, verify you as an accredited investor, and then you can sort of start to live your life again normally. So that's what came out earlier this week. And so, yeah, if you haven't gotten yourself accredited, please check out those emails. I will say, though, very, very important is that if you say you don't qualify for being an accredited investor, your funds in Abra Earn prior to October, they can stay there and they will continue to earn interest on your assets. So you don't have to do anything, but just know that if you take your funds out of it and then you want to bring it back again, you would have to get accredited. Right. Yep. So, just to know there.
Oh, one question we're also getting, and I saw one at the beginning, and I saw somebody just posted it now. How is Abra Boost affecting CPerks, and how is CPerks affecting Abra Boost? And I'm getting the question both ways. So, I think I know the answer. Why don't you comment on that?
Yeah. So CPerks is same rules apply. If the CPerks is just another asset that we have, just like BTC ETH. And it is going to continue to earn interest the way it always was, right? So the rules for CPerks is exactly the same as the rules for any other assets on Abra.
Yep, perfect. So very simply, if you're staking CPerks for yield, you're going to continue to make that yield, and all good. And our future plans for CPerks are unaffected by the migration to Boost. And Boost is another step towards us basically moving this under full Abra ownership under Abra Bank, whereas right now it's under our partner Prime Trust. So, okay. So I'll come back to you in a minute. I have some other stuff I wanted to mention, but Tanner, how's it going?
Things are good. Like you said, super busy, but plugging away, helping people as they need.
Cool. Cool. What are the you see any hot buttons this week or anything in particular new, or same old?
Yeah, pretty much same old. Like Deepak mentioned, there's that new flow to get accredited. If you are experiencing any issues, we're available 24/7. So just reach out to us, let us know. We have workarounds, and we can help you through the process if you feel like you're hitting any roadblocks at all.
Fantastic. And I've been testing. You guys have it's a really cool system. So basically, it's kind of like a quasi like natural language processing now when you go into the help support text chat area, whatever you want to call it. You click on support inside the app on the upper left hamburger menu there, brings you support. You basically start a session. It tries to figure out what you're talking about. Usually it seems pretty accurate. And if it's not something that it can give you an answer for automatically, it will simply bring in a live support person. Is that basically how it's working now?
Absolutely. Yep. And really the thought process here is that we understand that not everybody wants the same experience. So we want to provide options for everybody. We want to provide your ideal customer experience. And if that's talking with a human, great. If that's self-helping, that's great too. So just making sure that we're available for everybody the way that they want us to be available for them is really the goal for us.
Yep. Okay. So I want to talk about stablecoins for a minute. Word's gotten out about, and I think Forbes broke it a little bit early, unfortunately, but it is what it is. They were writing about our migration to this new stablecoin model as part of our new trading system. So why don't we give everyone a little bit of a preview as to what that means, because there's already some confusion. And we're not launching a new stablecoin, just to be clear. But we are consolidating your balances under $1 balance to make your life much easier so that you don't have to worry about the fluctuations between stable coins. That they're not stable, right? One true USD is not equal to one Tether. Usually there's a 1% to 3% spread, and we're trying to help you by eliminating all of that. So Deepak, why don't you start off and just give us the highlights of what that's going to mean and why we're doing it?
Yeah, absolutely. So again, I'll just, it bears emphasizing again, Abra USD, or you might have seen USDA. It's not a stable coin. It's just call it a branded virtual bucket of a bunch of stable coins that we put together, and then we, sort of present to you as Abra USD. When it launches, you're going to see in the app itself that it basically says that this is, it doesn't say it's not a stable coin, but it says it is backed by a bunch of stable coins, right? So again, Abra USD is not a stable coin. It's a virtual bucket, a collection of other stable coins. And the very, very cool thing about this is that if you've ever gone from, call it TUSD to USDT to USDC on any exchange, as Bill was saying, you will pay a spread. It's never one-to-one. And so the cool thing about Abra USD is that, let's say you deposit TUSD into Abra, it'll show up as Abra USD, but then when you go to withdraw, you can basically withdraw Abra USD in one of four stable coins at one-to-one, no spread, nothing. And so you can come in with $100 in TUSD and you can take out $100 in USDC one-to-one, right? That is very cool. Like to Bill's point is that it's helping you so that you don't get hit by the spread if you were to go on an exchange and go from TUSD to USDC.
Yeah. So just to clarify, because you said that very fast, but you were 100% right. This is really important. So I had a large client that I deal with personally who called me up a few days ago and wanted to actually convert a bunch of USDC into Tether because he wanted to earn the higher yield and wanted to make sure that the spread between USDC and Tether was low enough to warrant doing it, because if it was more than the incremental yield, he didn't want to do it. And so in English, what you're basically saying right now is if I deposit $50,000 of USDC, it'll show up as USDA, but I can actually withdraw it as $50,000 worth of Tether on a one-to-one basis with no spread.
That is correct. That
is awesome. I don't know anyone in the crypto markets who can do that. None of the exchanges, none of the wallets. I think we're the first to be able to do that. So I think that's going to really, especially as we segue into payments. we have the Abra card coming with American Express. I'm sure you'll see without giving too much away, you'll see other payment products next year. This is really important for a bunch of different reasons. So kudos to the team for
another plug for the trading infrastructure. I've been talking a bunch about sort of migration of the trading infrastructure. This is another thing that the infrastructure itself brings. So now you're going to see this as we launch this entire trading infrastructure that we've been talking about. That's going to be on the background, but the way you're going to experience it is price protected market orders with price safety. We've been talking about that, and Abra USD. So already at launch, there's going to be a bunch of really cool benefits for the users.
Yeah, I love it. I mean, I use it myself. I have to convert between stables, and often, the spreads on the retail side, I can't do it, and so now I can do it, and I'm super excited about it. And by the way, I'm not picking on Abra. It's pretty much the same with everyone. You get screwed because USDC is highly liquid. Tethers goes up and down liquidity depending on the exchange. Binance has their own thing. So this is great. And so again, somebody's asking, are withdrawals still limited to TUSD? No, that's actually exactly what we're saying. You can withdraw any stable coin as any other stable coin. So you deposit TUSD, you deposit USDC. You can choose now which stable coin you want to deposit as on a 1-to-1 basis, and there's zero spread. You're not paying a fee, unless there's a mining fee for the Ethereum network, of course, but you're already paying that. Not a mining fee, network fee. Sorry, we're no longer mining on Ethereum, but otherwise it's 1-to-1. So that means if you deposit True USD, you can withdraw as USDC. If you deposit USDC, you can withdraw Tether 1-to-1. All right.
Or USDT or TUSD.
Exactly.
Yeah.
Exactly. Or you can withdraw the same. You deposit Tether, you can also withdraw Tether. Yeah. We're obviously not taking that away. So hopefully that explains that. Anthony's asking more questions about accreditation. So how will U.S. non-accredited clients be affected when Abra Bank is launched? So, Anthony, the plan is that at some point we will have a full retail banking suite under the Abra Bank brand. That's actually why we're starting this migration now. And as such, you will have a full suite of interest earning products under the Abra Bank moniker at some point when Abra Bank launches in the coming weeks. Okay, so hopefully that makes sense. And we're also working to get staking-based services turned on sooner because those are regulated differently today. We'll have more to say about that soon. So if you want to stake in certain DeFi pools, or stake with ETH or other or Matic, you shouldn't have to be an accredited investor to do that in the US. Okay, so let's see. While I'm looking for other questions here, let me know if there's anything else you guys want to mention. But I'm just scrolling through the questions.
I'll just say that we're again, just a quick update on the price protected market orders launch. We're I think now just a few weeks away. We're at the tail end of it, and the team is working really hard. So maybe 3 weeks or so. Again, no commitments, but it is about 2 to 3 weeks from now that we will start migrating our users. And so some users will already start seeing that experience. And then we are currently targeting by mid to end of November for all our users to basically get migrated to the new trading infrastructure. And again, like I said before, that's going to open up a whole world of benefits for our users. So
super exciting. Can't wait myself. And so another question related to the new environments, but also the existing environment, is on ACH. Somebody's asking what our plans are for ACH, kind of speed, limits. So can you just give us an update on what's happening with ACH, how long the deposits take, what the holds are, what the limits are, and are there any changes coming?
So there's absolutely no changes on ACH or your ability to do ACH in the US or wires. Everything is going to be exactly the same. Although we are planning some improvements to our ACH and wire infrastructure, which would probably we'll have more to share early next year. But essentially our trading infrastructure has no impact on your ability to ACH or wire. So all of the limits, and I can't remember exactly what the limits are, but wire, I don't think there are any limits, but ACH, there might be 10,000.
I'm looking in the app right now because I get the same treatment as everyone else. So
yeah.
Whatever the limit is for me, is it per user or is it a global limit?
There is a per user and a per day total limit for a user as well. I think. We'll find out, but the point is that the trading infrastructure really doesn't have any impact on your ACH and wire experience.
Yep. And certain users who've been customers longer, they get a slightly faster deposit. Is that right? Or
yeah, so that depends. So that's a so slightly faster deposit, and the threshold that you can use to sort of withdraw if you like to, or the threshold of money that you need to keep in Abra for a certain period of time, that is all a function of our risk engine. So I should say this, because good point, Bill. Our risk engine is improving all the time. So there's a team that's working on improving the accuracy of a risk engine, and basically, any holes on your ACH, let's say withdrawals on your ACH, and your ability to sort of take that money and trade into an asset, and how what are some of the limits around that. All that is a function of what we call a risk score. So we basically risk score every one of our users, and on a per transaction basis, we're always sort of assessing the risk of, what should the limits be, and so on. And so that engine, as it improves over time, these limits are going to relax per user, on a per user basis. So we started off in a world where we have this blanket limits for everybody. That's actually not very efficient, right? Like if we were to have a sophisticated risk engine, we could basically assess on a per user basis what your limit should be. And so as this engine gets more sophisticated, again, like I said, there's the team working on it, is getting better every day. Every user might see a different limit placed on them based on their sort of risk profile, if you will. So that happens all the time, and that will continue to get better over time.
Yep, that makes sense. Okay, got it. All right, let's see. So I'm trying to see if we have any kind of generic support questions here. We've covered a bunch of stuff already. A lot of positive comments here on the stablecoin model for being able to withdraw. People saying that they've really gotten screwed in the past on stablecoin spreads. So that's really cool. I knew people were going to like it, but we're already seeing now that people are getting it a lot of positive comments. So yeah, that's great. So Tanner, how long does the process take to get accredited in the app? That's one of the questions I've gotten here a couple of times.
Yeah, it's a good question. You submit your documents, and typically speaking, it's like 24, 48 hours max. We try to turn that around pretty quickly for you. We want to be available for you, and we don't want you to have to wait. So, I mean, you'll see that with chat as well. I mean, our responsiveness, we're typically answering and connecting you to a live person in under a minute. So similar type thing. We want to turn this around as quickly as possible.
Yep. Got it. So, so a couple of you are asking about Tanner. Some folks are contacting support asking for the Pulse. So we should update them on how to contact the sales team to get their copy. So I apologize that I jumped the gun on that, but we will give us a few minutes until after this. And we'll get everyone up to speed on how to put them in touch with the sales team. So my bad on that when I jumped the gun. So let's see.
I have pulled up the website or the support page that talks about the limits. I don't know if you want to drop it off in the chat. So if you the URL is not is not an easy one, but
yeah, I'll copy and paste it. It's fine.
Okay, yeah. So that page will give you all of the limits for ACH and wires. So
got it. Okay. So I put it in we put it in the live chat for you. It should be there now. Okay, great. So actually, I didn't realize we're at 10 minutes after the hour already. So I think we should stop. I'm getting some evil eyes from some Abra folks waiting for me. So thank you guys for the updates, and it was briefer than normal, but I think it was worth it to hear from Mike. So we'll probably do a longer one next week and see how we're doing in the markets. But thanks for your time as always. We're very complimentary audience today. So thank you all for that. It feels good to know that what we're doing is appreciated, and we're doing it for you. We're not doing it for our health. So if you like it, we like it. So thanks for that. So you guys have a great weekend, and we'll see you online. And in the meantime, everybody have a great weekend. Stay safe, and we will see you next week on Money Talks.
Thanks, everyone.